Yeah, good morning, everyone. So yesterday, US market uh, had seen again positive momentum continuing from the previous day. So more of a positive direction was there, mainly led by the corporate results which were coming. Uh, People were talking about recession a lot, and that's why the market corrected. But getting that reflected into results will take time. And as such, as of now, results are comparatively better, and a reflection of the same is coming into the prices of the shares. Today morning, the futures are marginally lower, mainly on account of DXY has appreciated marginally, and that is putting up some pressure. And there was 2-day gain continuous, which is also having an impact on it. Apart from that, Asian markets are more of a flat, more of a some markets are indicating negative trend, and few are indicating a positive trend, but all within range of very less than 0.5%. So overall, seems like market is likely to remain sideways in today's trade. Uh, I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. This is Swati. Today, our Nifty is likely to open on a positive note, and we are going to witness a positive momentum into the market. Yesterday, we have seen that the Nifty has maintained a positive closing above its 100 DMA, which gives a very good indication on the technical front. I believe this pullback rally is likely to be extended at least minimum up to 16,800 levels. But the only thing we need to keep eye on whether the Nifty maintains a positive closing above 16,600. If it's maintained closing above that level, then definitely this rally is likely to be extended towards 16,800 to 16,900 levels on the upside. Whereas on the downside, the immediate support is placed at around 15,470 levels. Any move below that level, we expect some profit booking, which might take a Nifty towards 15,400 to 15,300 levels on the lower side. The overall view will remain a positive on the Nifty as long as it sustains above 15,470 levels. Coming towards the Bank Nifty is the one indices which is heading toward its 200 DMA, which gives a very positive sign on the technical front, bulb above 1500 DMA. It will be a Bank Nifty who might take a Nifty on the higher side, but the immediate resistance for the Bank Nifty is coming at around 36,190 levels, provided by its 200 DMA. Any move above that level, we expect a positive momentum to be carried forward towards 36,400 and 36,600 levels on the high side. On the flip side, 35,820, 35,640 are the immediate support level on the Bank Nifty front. Coming towards the Nifty Finance, 16,320 and 16,470 will be the first resistance zone. Whereas on the downside, 16,200 and 16,100 levels are the immediate support level on the Nifty Finance. Coming towards the stock specific, Cipla is really doing very well on the technical front. Yesterday, it has given the breakout above all the important moving averages. So the momentum is really very positive. We have seen a price momentum along with the volumes, which gives a very positive indication. Upside, I believe it has a potential to reach up to 1,020 levels on the high side. Whereas on the downside, 960 will act as a immediate support level. So these are the good counters on the technical front. Keep an eye on it, Cipla. Another stock, I believe that Pidilite really doing very good. We already have initiated a buy call on this particular counter. On the weekly chart, it is on the verge of giving the breakout of a downward sloping trend line. So those who have missed out buying call on the Pidilite, they can take a buy call at the CMP as well. We believe it has a potential to reach up to 2360, 2380 levels, whereas on the downside, 2280 will act as immediate support level. From the mid-cap front, FSL really looks very good. After a sell-off from this particular counter at the lower levels, we are just witnessing a rounding bottom pattern, and it has a potential to reach up to 120, 125 levels on the higher sides. Whereas on the downside, the support is placed at 107. So one can take a buy call in FSL with a strict stop loss of a 106. for an immediate target of 120 to 125 levels on the higher side. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Good morning, everyone. So, as per derivatives data front, we have seen a strong pullback has been witnessed from the market, and fresh long positions have been initiated in the market. As we mentioned in previous trading session, that the OI positions are getting shifted on the upper end. While as we look as per the yesterday's trading session, the major resistance on the monthly basis, heavy correlated positions and the major correlated position is at 16,600 level. So once if Nifty manages to break 16,600 level, then the possible shifting on the upper end would be towards 16,800 to 17,000 mark. While in yesterday's trading session, we have witnessed that at 16,400 to 16,200 strike, corridor position got liquidated against that at 16,400 and 600, 500 level. Put order positions are getting added up. So, this is a positive sign. With that, we are seeing that PCROI is at very strong rate. PCROI yesterday closed at 1.40 level. So till the time PCROI is above 1.15 level, market is likely to remain positive. With the again with that India VIX is continuously coming down. So this is also a positive factor. We will witness a less volatility in the market till India VIX stays below 18.5 level. So currently, if we look overall the derivative data points, all the data points are showing a positive strength scenario. So the nearest support for the market would be 16,400 level. If Nifty goes below 16,400 level, then we might witness some profit booking. So you should hold your long position with the support of 16,400 level. Once Nifty goes above 16,600, the nearest possible target would be 16,800 to 17,000 level in next 1 to 2 week trading session. Currently, we are seeing that FMCG sector is showing some good momentum in the market, and all the stocks from the FMCG front. We are seeing that the oil positions are getting added up from the FMCG sector. So you should select some specific stock from the FMCG sector. As per the stock specific, we expect HUL, Coforge, Persistent, FSL. These three counter looks positive. While in Cipla, we are witnessing that fresh long positions are getting added up in Cipla around 980 to 1000 call strike. So you should keep watch on Cipla. We can expect a strong momentum in Cipla in next 1 to 2 trading session. That's it from the derivative front. Thank you.
Good morning. Ardor Welding has received an order of 145 crores from ONGC, which is executable over next 30 months. This is positive. AU Small Finance Bank result was in line with expectation. Slippage for Q1 was at 2% versus 1.7% in March quarter. And it is still below the pre-COVID run rate for Q1. Historically, if we see, it has always ranged between 2 to 2.5%. GNPA was flat quarter on quarter at 2% and in line with pre-COVID run rate. The credit cost was at just 0.3% versus 0.7% for the entire of last year. Loan growth was strong at 37% year on year, one of the highest we have seen amongst banks. We expect the bank to deliver ROA and ROE of 1.6 and 16% in the current year as well as next year. And profit growth should be at 25% for next 3 years. Stock is available at PE of 20 times FY24, and we expect it to trade at 25 times going forward. So this is a good 25% kind of compounding stock from here. We remain positive. IndusInd Bank result was in line with expectation. However, the commentary was encouraging, and after many quarters of subdued performance, we feel finally there could be a turnaround beginning over here. On the positive side, the credit cost came at 2% versus 2.5% in March quarter, and the bank is targeting credit cost of less than 150 basis points for FY23. But we think this is achievable in the next year and not in the current year. Restructured book reduced to 2.1% versus sequential 2.6% as most of it slipped into NPAs, and management expects that 70% of this pending restructured book will eventually slip into NPAs, and thus we expect that slippages will be elevated for the current year. Slippages for the quarter increased to 3.6% against 3.5% in March quarter, and also against expectation of around 3%. GNPA increased slightly from 2.3 to 2.4%, mainly because of deterioration in the microfinance portfolio, where GNPA increased from 2.4% to 3.4% quarter on quarter. ROA reached 1.7% for the quarter, which we believe is sustainable going forward. And also the stock is available at cheap valuation at 1.4 times price to adjusted book value. And we feel that the bank has potential to re-rate to 1.8 to 2 times over the next 1 year. So we are positive on IndusInd Bank as well. Thank you.
Good morning, everyone. Nasdaq has posted its result, and the company has posted declined set of numbers both on the revenue and the margin front. Pause in a large healthcare account, slower than expected ramp-ups and delayed decision-making on high profitability deals led to this decline. Stock is trading at 15.4 times FY24 EPS. Wipro has posted below expectation numbers both on the revenue and the margin front. For Q2, the company has guided for a revenue growth of 3 to 5%. This bakes in inorganic growth as well. And with this, management indicates of having double-digit growth in FY23. IT services operating margin came in at 15% versus last quarter of 17.7%. This is despite the wage hike. However, management indicates they have bottomed out and there would be wage hike in September. Outlook is neutral on the company. Tata Communications has posted marginally above expectation numbers for the quarter, both on the revenue and the margin front. Stock is trading at 14.6 times FY24 EPS. Thank you.
Good morning. Sagar Cement's result was marginally above expectation. Sales volume came at 1.2 million ton versus expectation of 1.1. EBITDA per ton came at 514 versus expectation of 532 per ton. If we compare it with other cement companies, Sagar Cement's EBITDA per ton is down by around 30 or rupees 30 per ton. And if we compare it with ACC and Ambuja, where we have seen a reduction of around 150 to 200. So comparatively, Sagar Cement has posted a better set of numbers. JSW Ispat result has declined. Revenue came at 1665 crores versus 1688 crores sequentially. EBITDA came at rupees 17.2 crores versus 118 crores sequentially. So here what we are seeing is the company has been majorly hit by the rising input cost, wherein EBITDA margins have declined to 1% as compared to 7% sequentially. Alcoa Corp reported above expectation numbers. Revenue came at 3,600 million versus expectation of 3,450. Revenue has increased primarily due to improved shipments and higher pricing quarter on quarter. Alumina production came at 3.23 million ton, and aluminium production came at around 5 lakh ton, largely consistent with the first quarter output. EBITDA came at $913 million versus expectation of 909. As guided by the management, the full year shipment is likely to remain unchanged, and the management has guided for the ongoing inflationary pressure to continue for the rest of the year. So this can act as positive for Hindalco in today's trade. Apart from this, Tata Steel is likely to report its result on Monday, wherein consolidated volume is likely to fall by 18%, which will be partially compensated by a 4% increase in realization sequentially. Domestic EBITDA per ton is likely to fall due to an increase of $100 per ton in coking coal and higher fixed cost. Tata Steel Europe is likely to report a strong EBITDA per ton owing to strong tailwind of steel pricing. That's it from my side. Thank you.
Hello. Yeah, Mahima is not there. Okay. Yeah. Gland Pharma has reported numbers, and the numbers were not good. Though the result got impacted mainly on account of the supply chain issues. A lot of packing material they were not able to procure, and there was some issue in the production as well. So it was more of a one-off region wherein the result got declined and got impacted. Share is what the management has guided that after this the things will be more of a will get normal by second half, and we'll see improvement in the second quarter as well. And the company continue to maintain its 18 to 20% growth guidance, and also EBITDA margin of 31 to 33%. So what seems like this quarter was one-off, and we had seen the price correcting in recent past substantially. So here now the stock valuations are also comparatively attractive. So outlook seems positive for Gland Pharma. Havells India reported results. Here apparently here again result looks below expectation. Mainly got impacted because of the cable business. The cable since the copper and aluminum prices corrected very sharply in between. So there was some inventory loss which has been booked by the company in this quarter, and because of that the cable business has not done well. And also Lloyd business, though the revenue growth was substantial in this quarter, but the profitability got impacted. But what we see that the increasing sales of Lloyd is encouraging, and the cable business, whatever the loss which has come in this quarter, will revert back. And other businesses like switches and lighting and all has done very well, and the margin also sustained. So overall, if we see the Q1 sales as compared to last year, it has increased by almost 35%. But if you see 3-year CAGR growth of the 3-year CAGR growth of the Q1 result, then it has grown by 16%. So that is also encouraging. So overall seems outlook seems positive for Havells India, and valuation right now it is at around 44 time FY24 earning. If you see historical pre-COVID valuation, that was somewhere around 44 to around 40 to 50 levels, in between that it used to trade. So valuation wise reasonable pricing is there. It's not expensive or not even cheap. So overall outlook seems positive, but the gain will be limited. Then C8 reported numbers. Here again, sales growth was very good at around 48% year on year, but on the lower base. But if we compare it 3-year CAGR, that is Q1 FY20 and now, it has grown at 10% CAGR, 11% CAGR number. So that is considering the tire industry reasonable and good. EBITDA margin, which had a declining trend in last 2-3 quarters, continued to decline in this quarter as well because of the higher raw material cost. And EBITDA margin came in at around 5.9% versus expectation of 6.2, and quarter on quarter 7.2%. But what we feel that from here onward, the EBITDA margin to revert from here, mainly on account of the decline in the raw material prices and improving sales to OEM and replacement market. So outlook for tire industry is comparatively positive, but what we had seen that the tire sales has moved up in recent past. So maybe any corrections can be used to accumulate tire stock and see it as well. Then Som Distillery came up with the number. The numbers apparently seems quite strong. If we see, sorry, sales has grown year on year by around 407%. But last quarter, because of the lockdown, sales was very subdued. And even before that, in FY21 also, Q1 was very badly hit. Som Distillery Q1 is the key quarter wherein maximum beer sale happens, and almost 80% of the profit come in this particular quarter. So this is a crucial quarter for them, and now this is more of a normalized quarter which has come. So if we compare it as compared to FY20 results, Q1 results, then 3-year CAGR it has grown by around 11%, and which is reasonably okay. And profitability, agar EBITDA margin also, if we see at the time of Q1 FY 20, it was at around 15.4, which has come to around 13.4. So it has to catch up here also for mainly on account of higher raw material cost. This EBITDA margin was comparatively lower than the 3-year before number. So overall seems comparatively positive, as valuations are also seems reasonable, not very costly. And even company has announced that the promoter will be buying will be subscribing to warrant at the price of rupees 72, which is more or less current price. So that looks also positive for the company. So seems comparatively positive number for Som Distillery. Now results for next Monday. So Anup Rasayan is likely to report number. Here the numbers are likely to show improvement of around 25, 23 and 27% on sales and EBITDA. So the result is likely to show positive trend year on year. Craftsman is also likely to report number. The expectations are of more of a flattish to marginal decline quarter on quarter. But what we had seen that most of the company which are OEM to commercial vehicle had shown better than expected numbers in recent past. So quite possible Craftsman can also come up with good numbers. Then Glaxo Pharma, more of a numbers are likely to be flattish. India Energy Exchange is likely to report number. The numbers are likely to be okay. Year-on-year growth of 10% in revenue and 12% in EBITDA. Then Jindal Stainless is likely to report number. Here again, numbers are expected to show declining trend. The margins are likely to come off from 13% to 10% in this quarter because of the increasing cost. Jyoti Lab results are likely to be more of a okay set of number with revenue growth of 9% year on year and EBITDA declining year on year. Quarter on quarter EBITDA is likely to remain flattish. Then Microtech, that is Lodha Developer, is likely to report number. The key thing to watch is the pre-sales, which the figure company has already announced, and that were more of a okay numbers. Wherein quarter on quarter, the booking was lower by around 18% from 3,400 crore to 2,800 crore, which is generally is the case. So more of a okay set of number for Macrotech. Then Orient Electronic is also likely to report number. Here again, sales are likely to be sales are likely to increase by around 62% year on year, but last year was a low base. So if we compare it as compared to 3-year prior, it should be around 6% CAGR. So okay set of number. Then Sarda Cropchem is likely to report number. Here the numbers are likely to show improvement with revenue growth of around 16% year on year and 20% EBITDA growth. So Sonata Software is also likely to report improved set of numbers, and Sterlite Technology, which is consistently reporting poor numbers since last few quarters, are likely to show some improvement in this quarter, wherein margins quarter on quarter are likely to improve from 5.7 to 7.3%, and year on year revenue is likely to grow by around 26%. So seems positive. Supreme Industry is likely to report number. Here again, margins are likely to decline because of decline in the PVC prices. As such, margins are likely to come off from 15.3 to 14%. So declining numbers. Tanla platform is likely to show numbers, and here again numbers are likely to show improving trend with revenue growth of 28% year on year and 24% EBITDA growth. Tata Steel is likely to report number. Here, compared to other steel company, Tata Steel is likely to report better number, mainly on account of European business, wherein they had a low cost coking coal, and which will be helping them to improve the, will keep the margin flattish or EBITDA per ton flattish quarter on quarter. And even the EBITDA per ton of European operation is likely to increase from $240 to around $260. So that benefit will come. Whereas India operations, the margins are likely to come down by around 3,500 rupees per ton quarter on quarter. So overall result is likely to be more of a flattish year on year. Then on Sunday, Infosys is likely to report number. Here, the revenue growth is expected at around 3.7% CC dollar revenue growth, and margin is likely to remain more of a flattish. So more of a comparable number to TCS only on the growth side, but margin, if suppose this come, then it will be better than the TCS. Then Monday, Tech Mahindra result is also there. Here, numbers are likely to show declining trend. Revenue growth in CC terms is likely to at around 2.8%, but margin is likely to come off from 13% to 12%. So this is all from us. And now I'll hand it over to technical team. Yes, sorry, commodity team.
Hello, good morning. This is Harshal here. Today the focus should be ideally on dollar index. Marginal pullback maybe till 107.50 could be witnessed, which could result in a fall in commodities. Maybe later in the evening sessions, we could observe some corrections in dollar index till maybe 106. In the evening session, maybe we could witness the pullback in commodities. All in all, today it could be a range bound movement. Gold prices, if sustains 49,800, that is one can buy for a pullback with a stop loss of 49,700. Prices are expected maybe 50,200 to 50. Then again, a selling pressure could be witnessed. Accordingly, silver also, if 55,000 and 54,500 is holding, so one can buy for a pullback, but later we could witness some selling pressure. Copper too, it failed to sustain 632 resistance zone. So again, there could be a broad range of 632 to 615. The 615 ideally is important to watch out. So maybe if on a downside you can get 618. So for a pullback you can buy with a stop loss of below 615. Similarly, aluminum also, if holds 208 levels, prices could bounce back. So for a small stop loss, you can buy aluminum also. Crude is supportive at 79.50. 78.50, 7800. So on corrections in crude, one can buy with a stop loss below 7800. And prices again can test 8,050 levels. Yeah, and that's it from me. Ria could take over from here.
Hello everyone. So on the currency front, the Indian rupee is still witnessing a little restrictive movement, but is quite hovering around the 80 levels, with market looking for signs of further intervention by the central bank after the currency fell past 80 in the yesterday session. Now, all companies are still buying dollars along with the importers who are anticipating that there could be a further rise in the USD INR. There are talks of rupee testing the levels of 81, 82 as well. However, Reserve Bank of India is prepared to sell a sixth of its foreign exchange reserve to defend the rupee against a rapid depreciation. Now, the RBI, along with the government, are closely monitoring the situation as global central bank hike rates and are ready to take appropriate action, according to the statement given by the finance ministry yesterday. Now, what we could take from these statements is that they are not overly worried about the rupee's drop, but are taking more action towards managing the volatility. For the Indian rupee, the pressure that is coming is the overturn in the crude oil prices, as well as there are certain balance of payment concerns for India, including high oil imports, jump into the trade deficit, outflow of FPI, and almost $60 billion reduction in the foreign exchange reserve from its peak. So going forward, I think the decline into the rupee could be seen. However, like I said, it should be capped around 80, 50, 80, 75 at least for the month of July, August. On the shorter term, that should be the level that one should be looking forward with. In the intraday sessions, the trading range could lie within the levels of 80.16 and 79.87. So even for today's, a consolidated momentum could be seen into the Indian rupee. So that's it from my side. Thank you.
That's all from us. Thank you very much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.